This is CGTN, China Global Television Network.
Hello there, welcome to this edition of Global Business Africa. In the course of the hour, we'll run through the business news stories you need to know about from the continent and beyond. But first, an update on the markets. All the bourses from Africa that we track on the program ended the third week of June much lower. Both indices at the JSE over 3% in the red given today's close. Nigeria's main index and the EGX 30, they both shed over 1% in the last 5 days. Now, further afield, the EU did lose a legal bid to compel AstraZeneca to speed up the delivery of COVID-19 vaccines. The pharmaceutical firm was ordered by the courts to deliver 18 million doses by the end of September. The firm's management thinks they can actually pull that off before June is out. AstraZeneca shares are marginally high in London just after 16:04 GMT. They've gone up by at least 14% so far in 2021. Here's what's coming up tonight. Kenya raises $1 billion in its first eurobond issuance in 2 years. Nigeria's ongoing Twitter ban risks hurting the country's multi-billion-dollar tech industry. And strikes sparked by a controversial tax reform bill are threatening Colombia's coffee exports. All that and more is in the pipeline for you tonight. But first, let's start in East Africa. Barely 24 hours ago, Kenya tapped international credit markets to raise $1 billion in a 12-year dollar-denominated eurobond. Now, that particular note will be repaid, as we understand it, in 2 tranches in January 2023 and January 2034. The note got a yield of 6.3%. Now, this was the first such issuance from the East African tea and coffee exporter in 2 years, and it attracted over $5 billion in offers, which the country's finance ministry argued was a sign of strong global investor confidence. We'll explore if that's the case in just a moment. Now, despite repeated statements of intent to lower its fiscal deficit and decelerate the growth in public debt, the country has repeatedly failed to meet either goal. The fiscal deficit, for example, has remained well over 7% since 2016. And these two trends partially explain why Kenya's debt service costs in the fiscal year starting in July will go up by over 20% to nearly $11 billion. Now, a few hours ago, I spoke to Gibran Qureshi. He's the head of the Africa Research Desk at Standard Bank. I started our conversation by exploring how that 6.3% yield compares to other eurobonds of a similar tenor from across Africa.
I think that's fairly good pricing, especially when you look at it in the context of other similar rated credits like Egypt, that has a 31, 32 tenor, and Ghana as well. I think Kenya has got favorable pricing with regards to those metrics or comparisons. If you look at Côte d'Ivoire, however, which is a story people still like fundamentally, despite some of the political concerns, their 12-year is priced in the low 5%. So Kenya, comparatively to Côte d'Ivoire, didn't get great pricing, but I'd argue that in comparison to the likes of Egypt, Ghana, and even having this investor meeting a day after the Fed, it's overall very favorable pricing.
Okay, but looking at the bids that came in, we had $5.4 billion in bids for this one. We've seen much larger bids coming through for previous offerings. Given the fact that we have at least $10 billion in debt service due in the next fiscal year, the one that starts on the 1st of July, did we leave money on the table?
One could argue yes, especially given that, if the Federal Reserve is behind the curve with regards to inflation being transitory, and if it isn't actually transient, then of course the expected rate hikes that have been penciled in from 2023 could be brought forward in subsequent FOMC meetings for this year. So when you look at it in that context, then the argument is that perhaps Kenya should have taken a bit more now to use some for new money and perhaps some for liability management. But I think authorities do still expect to issue another Eurobond in the first half of this fiscal year, which is the second half of this calendar year. And I think a lot of those proceeds will go towards liability management, potentially to pay off or retire partially some of the expensive syndicated loans that the Kenyan government has contracted between the best part of 2016 and 2019. But overall, I would think that there's so much global liquidity that's chasing yield. I don't think that whether you come in June or whether you come in September, that there will be a significantly different sway in propensity or appetite for sovereign yield in Africa.
Indeed, and I think you sort of alluded to my next question, because looking at the statement that came out of Treasury yesterday, they were saying that that 5 times oversubscription, and I'm quoting Treasury here, was a sign of strong global investor confidence. But isn't this just a function of, chasing yield? Because there's a lot of liquidity out there that has fairly grim options. Greek 10-year notes, Greece of all countries, 0.8%. US 10-year notes, 1.5%. So if someone comes along and says, look, I will borrow for 12 years, I'll give you 6% on this money, obviously you're going to get a ton of traffic. This is just a yield play, isn't it?
Absolutely. I think you are correct. I mean, with regards to the monetary largesse with, broadly accommodative policy, the consensus is that it will persist for 1 year at least. And, the contrarian or counter argument to that is that, as I said earlier, if the Fed's behind the curve on inflation and rates have to be raised earlier to counter this spike in inflation expectations that we are seeing, then of course that could make liquidity a bit more scarce than it is right now. But I think comparatively speaking, as I said before, I don't think it will dry up the taps completely to make it, dramatically expensive or not possible at all for any African sovereign to tap the eurobond markets in the next 6 months or in the next 1 year.
But why is that faith there? Because the Kenyan government has been talking about consolidating public finances, bringing the deficit under control, bringing debt under control for the better part of, I believe, 5-6 years now, and they really haven't gotten a handle in it. Year after year, we just see blockbuster deficits, and our debt mountain just becomes bigger and bigger and bigger. So I guess looking at it from an investor's perspective, the question is, given the fact that this government says one thing and then does the complete opposite, why still invest in Kenyan debt?
A valid question, Ramah, indeed. And I think, as you mentioned, I agree with you that, the Kenyan, from a credibility perspective, the fiscal deficit has just not come down since 2017, 2018, and was even elevated prior to that as well. I think, in an environment where certain, funds have to take African risk, they're not going to ignore the Kenyan economy when they come to issue eurobond, for starters. But as I mentioned, and I still maintain, there is some element, and I'm not saying it's correct, but there is some element of a bit more credibility with the IMF coming back to town. If you think that the Kenyan government wouldn't lower its budget deficit and restore debt on a sustainable path without the IMF, I would give you that. But I guess the investment community believes that with the IMF and that added anchor of credibility, there's a better chance of the Kenyan government lowering its deficit.
Away from missed fiscal deficit targets, let's head to South Africa. Retail sales accelerated in the month of April. That's according to the latest data set from the country's statistics agency. Retail sales are up over 95% year on year in April after a 2.3% decline in March. Now, the largest negative contribution came from retailers in textiles, clothing, footwear and leather goods. On a month-on-month basis, retail sales are down by 0.8% in the month of April in the wake of a 4.5% fall in March. South Africa was under a very strict lockdown to curb the spread of COVID-19 in April 2020. Those restrictions drastically affected sales at retailers deemed by the authorities to be non-essential. Back into East Africa, Ethiopia started construction of a $110 million World Bank-funded dry port in the country's central region. Authorities say that the expansion of the Mojo dry port, which is being handled by the China Civil Engineering Construction Corporation, will modernize logistics in the landlocked country. Here's CGTN's Alexander Majala with the details.
The China Civil Engineering Construction Corporation, through a $110 million loan obtained from the World Bank, is upgrading the Mojo dry port. The Ethiopian facility will get an additional 6 warehouses, operating facilities, several roadworks, multi-purpose buildings, parking and greenery. Ethiopia's Transport Minister Dagmawit Moges says the expansion is of paramount importance in modernizing the landlocked country's logistics sector.
The purpose of this project is to scale up the capacity of the port as well as change its logistic facility entirely. It will also upgrade the Ethiopia-Djibouti railway capacity in order to handle the country's ever-increasing import and export endeavors.
The Mojo Dry Port is a key transportation and logistics facilitator between Ethiopia's hinterland and ports in neighboring Djibouti. It is also the logistics hub of the country, and the growth of the port will provide room for the town to advance.
Which is a transformative initiative which comprises comprehensive infrastructure enhancements of the port and associated facilities that are currently not available, such as export consolidation, dry bulk storage, and a multimodal transfer platform to make import-export more seamless.
Mojo Dry Port is located 73 kilometers from the capital Addis Ababa and was established in 2009. Currently, it's the largest inland port in Ethiopia, responsible for over 78% of import and export products in the country. Alexandria Majala for CGTN.
On to North Africa, where Egypt will start issuing sukuk bonds, essentially Sharia-compliant Islamic bonds, after the country's legislators granted their final approval. Egyptian authorities say sukuks can not only help to bridge the country's fiscal deficit, but also fund much-needed infrastructure investments. As Yasser Kim now reports, the North African state expects its borrowing needs to rise by over 7% to some $68 billion.
It's taken more than 6 years to get the green light from Parliament for the government to start issuing the Islamic bonds, commonly known as sukuk. These are bonds without a fixed interest rate and are linked to projects. Their return fluctuates depending on the project's profits and losses and are guaranteed by state assets, hence described as sovereign bonds.
It's better than conventional loan mechanisms. There will be higher return on investments because the risk is higher. It will attract new sources of foreign direct investment from rich Islamic countries straight into the sukuk because of the confidence in the Egyptian economy and its performance during the last few years.
The North African country is in the midst of a huge rebuilding process and is constructing new cities, new roads, ports, upgrading infrastructure, transport and railway systems. It needs huge funding, prompting the government to tap into this reclusive $2.7 trillion market. The Sukuk bonds law has been met with several objections before being ratified, mainly because of fears of having to sell Egypt's sovereign assets to bond owners. But the government has moved swiftly to calm those fears. Authorities have denied rumors that it will sell or lease strategic locations such as the Suez Canal or even the Grand Pyramids to issue the sukuk.
All the information is false. You issue sukuk on projects that are related to assets, not the asset itself. It has nothing to do with the Suez Canal or High Dam. These are just rumors. The thing is, you establish projects and issue sukuk as bonds to finance the projects in return for profit sharing. The buyer doesn't have any partnership or ownership in the asset. The buyer only has rights on the revenue and the interest of the project he financed.
The government is set to establish a company that will oversee the state assets and projects to be funded by the sukuk bonds. Yasser Hakim for CGTN, Cairo.
All right, then a quick run through some company news starting in aviation. Kenya Airways has increased the frequency of its direct flights to the United States to 3 times a week, up from once a week. That's been occasioned by a rise in demand for summer bookings. Ever since the onset of the pandemic, the airline has been struggling with low numbers on that particular route. Kenya Airways was operating 5 flights a week to New York before the COVID-19 pandemic hit. Uganda's financial regulators are working to boost fintech innovations in the country. The Bank of Uganda has officially unveiled a regulatory sandbox to help fintechs develop new products and services. The regulator will also be providing oversight and the necessary safeguards to enable startups to create innovative financial solutions in a live and controlled environment. Further afield, Fertin Pharma, it's a maker of nicotine chewing gum. It's attracting takeaway interest from a range of suitors, including the cigarette giant Philip Morris International. The Danish company's private equity owner has been working with an advisor to gauge interest in the business. Fertin could be valued at over $700 million, including debt, in any given sale. And finally, ByteDance, the Chinese company behind the smash hit video app TikTok, saw its earnings double last year. An internal memo released to staff showed that the firm's total revenue went up by over 100% to $34.3 billion in 2020. The figures essentially underscore TikTok's continued global popularity. It comes as ByteDance and several other Chinese tech giants have come under increasing pressure from governments around the world. That's a run through your company headlines. You're watching Global Business Africa. Time for a short break. Here's what's coming up. Nigeria's ongoing Twitter ban risks hurting the country's multi-billion-dollar tech industry. We'll explore that next. And Tunisia is banking on Europe to revive its badly affected tourism industry. The details coming up next.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business, only on CGTN.
There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place, even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN, see the difference. Welcome back to the program. Now, in recent years, Nigeria's largest city, Lagos, has become Africa's most attractive tech hub as far as investors are concerned. But that attractiveness could be imperiled by the government's recent decision to suspend Twitter operations in the country. One particular area of growth in Nigeria's tech scene has been the massive fintech sector. Homegrown businesses like Flutterwave and Paystack are two examples of fintech firms that have been quick to take advantage of the enormous growth potential in the West African oil-producing giant. Both privately held tech firms have valuations of more than $1 billion based on their last funding rounds, essentially earning them that coveted unicorn status. Even though no direct connection has been drawn between the two actions, Nigeria's Twitter ban came just 2 days after the platform took down a tweet by the country's president, Muhammadu Buhari. Twitter at the time argued that message was deleted because it violated rules against abusive behavior on the platform. All right then, so a fortnight into the ban on Twitter in Africa's most populous nation, where it had over 39 million users, what happens next? Let's explore that in a bit more detail with lawyer Ridwan Oke, joins us now live, of course, from Lagos. Ridwan, thank you very much for your time this evening. So the federal government has kept on claiming that this ban is temporary, but at this point in time, do you have any clarity on when the ban may be lifted or what conditions need to be met before the ban can be lifted?
Hi, thank you for having me. The Nigerian government has refused to give clarity as to the Twitter ban in Nigeria. And when you're talking about suspension, Twitter has been suspended in Nigeria and it is indefinite. And there is no clarity as to when Twitter will come up in Nigeria again. Most young people like me are currently using VPN to access Twitter currently. And there is no particular justification, there is no particular time frame and we feel the government is just waiting and hoping that people will just move on like every other thing. But currently, there's no clarity as to when the suspension will be lifted and as to what will happen afterwards.
Let's focus on that legal issue, because the justification here was that, according to the information minister, that Twitter's unfettered access essentially acts as a threat to the corporate existence of Nigeria. But under Nigerian law, what's the basis for banning Twitter?
There's no basis at all. And in fact, this is particularly worrisome, because you don't have the legal background to actually ban Twitter or any social media app, then why go ahead to ban it? And for example, a few days ago, the federal government has approached the National Assembly to widen the power of the Nigerian Broadcasting Corporation to be able to license social media apps. And this gives you the idea that the government knew, and they are well aware that they don't have the power and the right to ban any social media app as it is currently in Nigeria. There is no power, there is no law that actually gives them the right to limit or regulate free speech in Nigeria as it is right now. And that is why the government has approached the National Assembly.
Unfortunately, we've lost that signal there to Ridwan Oke, a human rights lawyer in Nigeria. It's certainly an interesting conversation. We'll keep tabs on it on the program. Now, we're still, of course, in Nigeria. Food prices over there have continued to soar, even after the headline inflation rate fell very marginally for the second consecutive month in May. Now, the latest data from the National Bureau of Statistics there shows that annual inflation fell by just 19 basis points to 17.9%. But as CGTN's Kelechi Emekalamna reports, that drop belies the fact that food prices in Nigeria just keep rising.
After 2 decades of selling foodstuff in the Nigerian capital, Uchenna Obidike is considering closing shop. The trader has been battling low sales and decreased turnover for some time now. The rising cost of food is affecting his business.
I don't know the way they calculated it, but what we are seeing here in the market here, the reality on ground, things are going high every day.
Although Nigeria's inflation rate has declined for the second time this year by a 0.19% margin than the rate recorded in April, prices haven't eased.
I've not noticed anything, because most shops I entered, I've not seen, maybe I want to buy granite, they said it's no more 300, it's 250 now. I've not seen anything like that. Before, we used to buy gari 250, a mudu, 300, like, you know. But now it's 500. Before, I used to use that 500 and buy 2.5 mudu.
Economic watchers say the decline is not enough to make any significant impact on the cost of goods.
On the part of government, it could be that we are trying to do something. There is one major factor that is actually driving all of this, even though they are interconnected, which is insecurity. If this government is able, Mr. President in the next couple of days is able to come out and decide to bring together all stakeholders at the subnational, that's the state, and even at the local government, and put in place a robust roadmap for addressing insecurity in Nigeria, you will automatically see the trickle-down effect on the economy.
The World Bank reports that an estimated 7 million more Nigerians are living below the poverty line, bringing the number to 105 million people within the last 2 years. That's more than half of the country's 200 million strong population. Analysts say if no prompt policies are executed to reverse the trend, many more Nigerians will face increased hardship. Kelechi Emekalam, CGTN Abuja, Nigeria.
Into North Africa, Tunisian authorities are pinning their hopes on Eastern European visitors to revive its battered tourism sector. Revenue from the North African nation's vital tourism space has plunged by over 60% given the pandemic-induced travel slump. But now, with up to 10 flights a week arriving at its main airport, mostly from Russia and Eastern Europe since May, officials in the country are holding out hope of at least 1 million tourists coming into the country. From Tunis, here's CGTN's Adnan Chouachi.
The Tourism and Transport departments in Tunisia have announced that the country has received more than 90 flights from Central and Eastern Europe since the resumption of tourist flights on April 19. 14,000 travelers have visited the country in 3 months, over 350 tourist flights from Russian, Central and Eastern Europe are scheduled for June.
We have agreed with our partners in the countries that have chosen Tunisia as a destination for the summer holidays to ease the entry and departure procedures. We have respected all conditions to ensure the safety of hotel units and tourist areas. To guarantee the success of this operation, we are working with the Ministries of Transport, ICT, Culture as well as Environment and Agriculture departments.
The Minister of Tourism and Handicrafts described Tunisia as a COVID-safe tourist destination. Authorities in the North African state say they are expecting hundreds of flights in July.
We are expecting more flights despite the COVID-19 crisis. Tunisia's health protocol has already proved its efficiency. It has been approved by foreign tour operators. We have also launched a digital promotional campaign for the Tunisia destination. After 12 months of uncertainty, we are hoping to revive tourism this season.
The tourism department has put in place a strict health protocol for tourists, as well as tourism professionals. The plan has been approved by the Scientific Committee and the COVID-19 Task Force.
We have imposed strict enforcement on the health protocol. Our aim is to resume normal activity while protecting lives.
The Office of Civil Aviation and Airports announced that Tunis-Carthage International Airport has received the ACI Airport Health Accreditation awarded by the Airports Council International. The accreditation is granted to airports which apply the proper international standards against the spread of the coronavirus. Tunisia has launched the COVID-19 vaccination campaign for tourism professionals across the country. The inoculation campaign is aimed at jump-starting the vital tourism industry, which has been battered by the pandemic. Abdel Shawishi, CGTN, Tunis.
3 floating power stations moored at a number of South African harbours are expected to provide the much-needed electricity that Africa's most industrialised economy desperately needs. But these power ships, if you will, which produce energy by burning liquefied natural gas, are also a lot more detrimental to the environment than solar or wind power. Oyster farmers and small-scale fishermen are especially concerned, as CGTN's Nokutule Shabalala now explains.
Power ships, which produce energy from liquefied natural gas, are expected to be on South African shores around August 2022. This comes after a Turkish-based company, Car Powership, was awarded 3 bids to ease the pressure on struggling state-owned power supplier Eskom. The floating power stations will be docked at Saldanha, Richards Bay and Gqeberha. Currently, only 3% of South Africa's energy mix involves LNG. And while much more expensive than coal, gas power is cheaper than the diesel used to run Eskom's open-cycle gas turbines. However, environmental groups have raised concerns around the continued use of fossil fuels.
Any new development, as the same way as we've done, would need to evaluate the impacts that they're having both on the environment and other users in the bay. And then it would need to be an assessment in terms of what that impact is, can it be mitigated, and what impact would it have on the socio-economics.
Researchers have warned that Car Powership's 20-year contract could generate close to 20 million tons of carbon dioxide equivalent emissions per site. Oyster farmers and small-scale fishermen have been particularly critical of Car Powership's environmental impact assessments.
Who says the fish will return to the bay if the Car Powership is here? And to think it's a big ship, it's noisy, it's generating heat and everything. And over a period of 20 years, no, it's not a good thing for us.
For seafood sellers like Kevin Ruck, fear that hot water discharge from the Car Powership vessel may stimulate harmful algae blooms that could render succulent oysters inedible. Started in 2008, Ruck's company harvests up to 1 million Pacific oysters a year, mainly destined for the domestic market, but also exported live to China. Scientists argue industrial noise beneath the ocean surface can disrupt marine animals' ability to mate, feed, and even evade predators.
We don't believe it can just be benign sitting there, because it is generating hot water and it is generating a noise factor which can affect the organisms we cultivate. So we would be anti the ship unless there is enough detailed study or scientific opinion on what that effect will be. Yeah.
Any prolonged delays to car power ship's bid could disrupt South Africa's most promising plan to meet its power shortages. The Turkish energy firm says its environmental impact assessments for all 3 sites demonstrates little impact to the surrounding air and water environments. For oyster farmers and small-scale fishermen like Kevin Ruck, however, the risks are just too great. Noktula Shabalala, CGTN.
Time for a short break. You're watching Global Business Africa. Here's what's coming up. Strikes sparked by controversial tax reform bill threaten Colombia's coffee exports. And we'll explore how this pandemic has caused used car prices to race to record highs in the US.
This has taken me completely out of my depth, but at the same time it's exciting. It's new, it's different, it's a challenge.
It's really exciting.
Business in Africa is at the crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant.
Only on CGTN.
How will your world change today? What happens here? What happens there? Or what you make happen for yourself? If it matters to you, it matters to us too. Your stories are the stories that need to be told. Africa Live. Find your voice.
I consider him the epitome of Zambia.
There is no Zambia without KK.
I regard him or consider him in the class of Nelson Mandela, Martin Luther King.
He's a living legend, I must say. He's a living legend.
I have to give it to the old man. He doesn't know, if that's the right term, when to quit. Because he just goes and goes. After office, it's like he never left.
I just thank God, young man, that he has made it possible for me to live this long and be able to help reshape this nation into something wonderful.
Welcome back to the program. A quick run through some of the stories making your headlines at this hour. Starting in Nigeria, gunmen have kidnapped at least 80 students and 5 teachers from a school in the state of Kebbi. This most recent attack took place at a federal government college in the remote town of Birnin Yauri. Police say the gunmen broke through the college gates and went straight into the students' classes. During an exchange of fire later on, they killed 1 police officer and also shot a student. Officials say that most of the abducted students were girls. Cote d'Ivoire's former president, Laurent Gbagbo, has returned to the country after spending 7 years in the custody of the International Criminal Court. He was facing charges of crimes against humanity there, but he was eventually acquitted. Gbagbo's return comes after negotiations between his camp and the current government. Upon reaching Cote d'Ivoire's commercial capital of Abidjan, the former head of state was greeted with quite a bit of fanfare and excitedly welcomed by his supporters. And finally, the United Nations General Assembly has appointed the Secretary General, Antonio Guterres, for a second 5-year term. The 193-member body made its decision on Friday after the Security Council expressed support for his re-election. The 72-year-old Portuguese politician has served as the head of the United Nations since 2017. China's ambassador to the UN has congratulated him, saying he could, quote, count on China's full support, end of quote. That's a run through your headlines. Colombia's national strike started over a controversial tax reform bill, and that later on grew into a long list of other policy demands. The protests have since calmed down, but they lasted for more than 6 weeks. But the strikes also hit one of Colombia's best-known exports, coffee. Here's CGTN's Michelle Beguet with that report.
Coffee grower Jaime Gutierrez Muñoz has been in the coffee industry for the past 17 years. In 2019, he began his own coffee export company. His business survived the pandemic lockdowns, but now Colombia's national strike has presented its own challenge. Roadblocks and streets jammed with demonstrators have delayed coffee shipments across the country, especially to key Pacific ports like Buenaventura. Coffee producers like Muñoz have not been able to make deliveries on schedule. He's experiencing delays even though his dispatch center is only 2 hours away from Bogotá's El Dorado International Airport. Fortunately, his clients have been flexible, but he fears that prolonged strikes will become a long-term problem.
We are full of product internally, and what is going to happen is that the price of coffee is going to fall again, and this is going to affect the producer as always. All the advances we had made in the last decade, to be known for our coffee, for quality, we are going to have old products.
Colombia's National Federation of Coffee Growers says international buyers have already warned they are looking elsewhere for their coffee needs.
This is a message that leaves us alarmed because we don't have anything else to tell that buyer, that someday our Colombian coffee will be able to be sent in a continual way as we used to.
Colombia's Federation of Coffee Growers says the evidence is in the data. Exports fell 52% in the month of May compared to the same month last year. With talks stalled with the National Strike Committee, the government announced a new strategy to break the impasse. It organized 200 separate regional talks with local government officials and protest leaders, bypassing the National Committee completely. Muñoz remains optimistic.
I think we need to support both sides with ideas and strategies to help them get out of this crisis. I think we have the people and the capabilities to get out of it.
Michelle Beguet, CGTN, Bogotá, Colombia.
From energy to trade to tech to coronavirus vaccines, China has worked to strengthen ties with various Arab states over the years. From the 19th to the 22nd of August, China will be hosting its 5th China Arab States Expo. Our reporter, Huang Wei, examines what's in store.
The theme of this year's expo is strengthening trade and economic cooperation and jointly building the Belt and the Road. There will be both offline and online events, including a business summit, a conference to promote trade, and a number of panel discussions. The expo consists of 6 sections: the digital economy, clean energy, green food, cross-border e-commerce, international goods, and healthcare.
We plan to release the annual report of the development of China and Arab states and sign a joint communique on energy cooperation between the two. We also expect to sign more than 10 agreements on technical cooperation and transformation and announce more than 20 technical achievements. Some major Arab companies and Chinese companies have confirmed they're joining the event. They include the Saudi Aramco and the National Bank of Kuwait, the Chinese telecom company Huawei, and artificial intelligence company iFlyTech.
The China Arab States Expo started in 2013. In the first 4 expos, more than 20 national leaders, over 5,000 companies, and 40,000 guests from China and abroad took part in the events. They've signed more than 900 cooperation programs. China is the #1 trading partner of the Arab countries, and they've become China's largest overseas crude oil supplier. The trade volume between them reached nearly $240 billion last year. Despite the COVID-19 pandemic, China's exports to those countries exceeded $120 billion in 2020, up 2% from the year previous. The two-way investments mainly cover the areas of oil, gas, construction, manufacturing, and power. Chinese Vice Commerce Minister Qian Keming believes the two sides have great potential for future cooperation.
Despite the impact of the pandemic, the foundation of our trade and economic cooperation is still strong. We will also expand into new cooperation areas, especially joining the Arab states' new strategies in industrial diversification, the digital economy, new energy, and artificial intelligence. We will also strengthen our cooperation in dealing with the pandemic, including the purchase of medical supplies, investments in medical sectors, and vaccine production.
Wang Hui, CGTN, Beijing.
If you've tried shopping for a car lately in the United States, then you know firsthand prices of used vehicles are just going up. In fact, according to the car research site Edmunds, the average value of used cars traded in for another purchase has gone to an all-time high in the month of March, and that trend is only continuing. CGTN's Hendrik Sibrandi now reports, though, this is simply an issue of supply and demand.
Green-Eyed Motors recently switched Colorado locations, in part because it needed more space for vehicles, only to discover
cars are hard to find right now.
Owner Luke Walsh says it's an interesting time at his used car dealership.
So we have space for about 250 cars, and we're carrying about 130 cars right now.
At the same time, the prices of the vehicles he procures and sells, many of them electric and hybrid, have steadily gone up over the past few months.
Oh, they've more than inched up, yeah. Starting in March, they shot up. April went higher, May went higher, it's higher now.
These are crazy times in the car industry. A global shortage of semiconductor chips has made it harder to manufacture new vehicles, making them less available. People have turned to used cars instead.
I think a lot of people are having sticker shock right now when they are going to shop for used cars.
But Emily Voss with Carfax, the web-based service that provides vehicle history reports, says that's not stopping them from pulling the trigger. Basic supply and demand.
Car dealers cannot stock their lots quick enough. Vehicles are coming in and being sold almost immediately.
Creating a used car market that's hotter than this heat wave. Voss says the estimated list price of vehicles like these, dents and all, has gone up 25% in the past year, reaching historic levels. CarMax says trucks are now 44% more expensive. Rental car companies, which typically feed the used car market, are rebuilding their fleets after selling many of their vehicles during the pandemic last year.
And there aren't really new cars available, so they are looking to fill out their fleets with used cars. So they're almost competing with the consumer to buy used cars as well.
On top of that, people have money to spend and are looking to travel a little bit more.
Basically, my only criteria really was that it was inexpensive.
Julia Moravchik says she still managed to get a pretty good deal.
I just wanted something that could get me to the grocery store. I didn't need anything great.
Voss urges consumers to broaden their search, check a vehicle's history, get an inspection from a trained mechanic, and do a test drive to make sure they're not overpaying.
The market conditions are changing, and it's more important than ever to do your homework.
It's a weird time.
Walsh, whose sales plummeted early in the pandemic, isn't quite sure if the current conditions are good for his business.
Yes and no. I mean, I wish I had 250 cars out here and our volume was higher. What everyone's worried about too is we're trying to keep our inventory level down because you don't want to be stuck with all these cars you paid too much for when the music stops.
Experts expect the used car market to remain pricey, at least through the summer.
Completely unprecedented. No one's ever seen this. No one knows what to do.
Except ride it out and hope new cars assume their normal role in the automotive arena before too long. Hendrik Sibrandi, CGTN, Denver.
It might come as a surprise to some, but the property sector has been getting a fair bit of attention related to climate change and sustainability, and arguably rightfully so. Contributing nearly 40% of global carbon emissions, the real estate sector constitutes one of the greatest potential opportunities for addressing environmental issues, including climate change, while also creating economic opportunities for both investors and asset owners. Jiang Shishuan has more on what's hot tonight.
A green building is one which in its design, construction or operation reduces or eliminates negative environmental impacts and which can have a positive effect on the climate and the environment. As of the end of April, China had almost 6,600 building projects with certifications for sustainability and resource efficiency issued by the U.S. Green Building Council. But the transformation of the sector to a more efficient and sustainable model requires an astounding amount of capital, and so-called green bonds are emerging as a potential and promising financing source. In 2018, Hong Kong's Swire Properties launched its first green bond. Part of the proceeds were used to finance one of the company's major office developments, One Taikoo Place.
In 2019, we were the first company in Hong Kong to launch a finance mechanism against year-on-year ESG performance targets. And recently, we were delighted to be named a top 10 green bond issuer globally and the only one Hong Kong company. Out of nearly 700 green bonds evaluated, our green finance report was cited as a leading example of industry good practice.
As of now, approximately 30% of Swire's bond and loan facilities come from green financing, and is working to raise its figure to 80% by 2030. Under a series of government restrictions aimed at cooling price rises in the local residential sector, overall funding in the domestic development sector has been shrinking. But the issuance of green bonds from Chinese real estate firms has been rising at a significant pace. As of the end of May, Chinese real estate firms had issued green bonds in overseas markets worth almost 28 billion yuan. That was up more than 1.5 times from the whole year of 2020.
About 1/3 of the global green bond issuance are supporting low-carbon buildings. And in Hong Kong, the figure is about 45%, not just only in green bonds. Actually, recent years, we see a lot of green financing tools are used by Hong Kong developers. They start to realize that the ESG trends globally and also the investors' appetite for ESG investment. So they start to join their international peers in this green transitioning.
But so far, real estate green bonds issued by Chinese firms have been floated in overseas markets, leaving a large market potential here on the mainland.
China has been the largest green bond issuers for many years already, and just for this year alone, as of May, China has issued about 30% of the global green bond issuance. That is about $26 billion. But only a really small fraction of money are used in buildings. That is because of the tight control of government on real estate industries. But in the long run, especially as China has made a commitment towards the 2060 carbon neutral ambitions, we can see that the green financing will just take rise as it has already been a few years.
Wang suggests property developers be transparent and improve their sustainability reporting to ensure investors understand just how bond sales will contribute to green transitioning. She also says developers should consider green fundraising to retrofit existing buildings or for urban regeneration projects instead of building something entirely new. Zhang Shixuan, ICS for CGTN, Shanghai.
Quick run through commodity prices for you in this segment. Copper contracts in London dipped quite a bit in today's session, down 3.6% at 13.05 GMT, around $9,300 a ton. There actually was a lower price print a little earlier in the session. At that point, the decline for the week is just over 8%. Brent crude not around the peak of $74.90 hit on Wednesday, but it's on course to end the week at least 1.25% higher. That would be the fourth consecutive week of gains for Brent. Prices on that benchmark have gone up by 43% so far in 2021. Here's what's coming up next. When we return, we'll introduce you to a Kenyan firm that's turning denim textile waste into carpets.
Africa is a continent of diversity, with varied climate and enchanting geography, and a people so distinct, but with a shared enduring spirit. We are at the heart of the continent to bring you the untold stories.
Let's have a look.
We celebrate Africa as it shapes its own destiny.
Aden, Tunis, Cairo, Juba, Johannesburg, Ethiopia, Tanzania.
Africa Live. Find your voice.
Images may appear to be identical, but looks can be deceiving. The difference is not always obvious. It has to be discovered. There are always different sides to a story. We put the focus on the details. To see more, to understand better. CGTN. See the difference.
You don't find the stories of North Africa by sitting on the sidelines. No one else will take you where we can in North Africa. And no one else will show you what it's all about. CGTN, see the difference.
Welcome back to the program. The fashion industry generates billions and billions of dollars worldwide. The latest trends, the latest designs being celebrated on the runway and in high-end retail stores. But after the glitz and the glamour is done, the industry accounts for enormous amounts of waste. A lot of these worn pieces end up in the landfill. In Kenya, though, Africa Collect Textile is intent on reversing the fate of textile waste through upcycling denim and turning them into carpets. CGTN's Beryl Oro has that story on Grassroots.
In 2018, Kenya imported about 176,000 tons of textile for the second-hand clothes market to fit the demand for Western fashion. But not all textile found at the market is made to last, and this leads to textile waste.
Yes, they're collecting stuff, they're using stuff, and it ends up in Africa. Of course, it has created jobs in Africa, like, for example, in Gikomba market or toy market. But at the end of the day, we have to ask ourselves, what happens then once the textiles are used here locally? And of course, the assumption it ends up in landfill, either in Dandora or within rivers and lakes.
The burden of textile waste in Africa is an inescapable reality. With ill-equipped and in many cases poorly funded garbage collection systems, most textile waste ends up in landfills. Africa Collect Textile is attempting to short-circuit this.
This is one of our collection centers. It's at 2 Grapes, Wines and Friends, whereby we have placed our collection containers, as you can see. And our main purpose here is to provide what we call like conveniency and strategic point to the people who live within Kilimani or within the vicinity of Kilimani, so that they can be able to come and donate their used textiles and footwear anonymously.
The pandemic had a direct impact on textile donation and people's ability to access drop-off points. This led to a change in the collection model.
We started telling people that we can also do what we call like door-to-door pickup, which has really picked up over the last 6 months.
Africa Collect Textile then delivers the sorted denim to Weaversworth. Founder of the organization, Rose Mwathi, has hired several women weavers to support the growing project. As a pioneer collaborator with Africa Collect Textile, every good product is critical to cement a positive local market response.
Sometimes the customers find, sometimes are not sure we will get there. But as we know, we try things out, slowly until we get there, until we manage to do it.
The upcycling project currently utilizes denim and khaki material.
When it comes to the fact that you can utilize it in a way like this to make a carpet, it's very exciting and acceptable.
However, the team is seeking support to avoid downcycling the other textile waste that cannot be repurposed.
At the moment, we are working with the Engineers Without Borders, Netherlands. Still is in the process. We are trying to develop a machine like for a local problem, for a local solution, whereby all the textile that cannot be reused again, for example, that is torn, is ripped, and it doesn't have any kind of purpose. We want to come up with material that is homogeneous, fluffy, and lightweight, and can be used now for pillow filling or sofa set filling, or and even construction industry.
The sale of the carpets has earned a market in Europe.
We already have a distributing company that deals with upcycling, selling of upcycling products. It's called Nick and Mick. They were interested with our rugs, and they would like to distribute it the whole of the Netherlands, Belgium, and Luxembourg. That means we cannot sell that rug even directly to the countries like Netherlands.
It is said the beauty of denim is in its versatility, and thanks to Africa Collect Textile, every piece of denim can be repurposed to get a new lease of life, this time to dress the home. Beryl Oro, CGTN.
A quick run through the currencies for you. So we're going to be focusing on Nigeria for this one. The IMF has flagged the creeping reintroduction of fuel subsidies in a West African oil producer as one of the key risks to the country being able to actually contain its fiscal deficit this year. The fund expects that to remain at around 5.5% of GDP. Now, while the fund was complimentary of the decision to remove at least one official exchange rate between the naira and the dollar, it does continue to urge Nigeria to work on getting to a single market clearing rate as soon as possible. The naira, of course, did fall to a four-year low of 5.05 to the dollar on the parallel market. That's according to data from abokieffects.com. On the formal market, though, the naira went as low as 410.84 against the dollar in today's session. That's it for today's edition of Global Business Africa. As always, we'd like to hear your thoughts on the content you've seen here in the last 60 minutes. Many ways to get your thoughts back to us. All of them are on your screens right now. I'm Ramah Nyang in the Kenyan capital, Nairobi. Thank you for your company in the last hour.